Hi, Kerry here with Best of Us Investors. This is a unusual time for me to be knocking on your door, but I wanted to do something special. I have told you over the last couple of weeks that we're broadening our channel. I've become very focused as a long-term investor. Become very focused on the events that are changing our world, and I'm investing in that change. But that doesn't fit everybody's agenda. So, because we all have different investment agendas based upon our needs, our desires, and our interest. So, to that extent, I've been broadening the presenters in on our channel. And Trent, my son, has done some things, and Jacob has done some things. And I want to introduce you today to Mark. Mark, you may know because he's been on our investment committee for a number of years. And if you do know, he's very much a value investor. He only invests in companies that are making money and he thinks are going to make money in the future. And he does a lot of research into the workings and the annual reports and the quarterly reports and the broadcast calls on a quarterly basis. So he digs deep. And he's not one, and he'll tell you in the video that he doesn't own maybe none of the stocks that I own. But I want you to have his knowledge available to you. And so I'm going to interview him so that you get to know him. And then he is going to appear on our channel every Wednesday at 4 p.m. Central Standard Time. So after the market closes, and I want you to think of this channel, Best of Us Investors, as a toolbox, a place you can go to get information to help you achieve your task. And your task, whether it's a plumber or a carpenter, you've got to have tools, and you've got to have tools that you can trust and that will work for you. So after I explain here that I am not one of your financial advisors, that I'm here to educate you, and I'm here to bring people to you that can broaden that education. After we get done with that, I want to introduce you to Mark.
Best of Us Investors presents Carrie Griegmeyer.
Thank you for joining me, tell us a little bit about yourself, your background, your interests, and who you are.
Well, thanks for that introduction, Kerry. It's really interesting. I found your channel probably, I don't know, a year ago or so, and I was intrigued on your style and your background, and it kind of fit mine in a way, and we're kind of in the same age group. We have different styles of investing, and there's nothing wrong with that. Like you said, I do things differently, and I don't think I own exactly any of the stocks you own. But I'm sure you don't own any of the stocks I own.
Okay, we'll find out.
Yeah, I mean, so that's good. And you need to be diverse in how you invest because, and I'm sure you agree, you were a financial advisor, just like I had a background in trading and brokerage. And if you're a young person, you're a lot different than somebody who's going to retire, okay? If you have a lot of money to invest, you can take some more risk than somebody who might live day to day, okay, yeah, but wants to invest. So there's this tent is open for a lot of different people in your tribe and in your Discord. So it's interesting to see that. And in my view, is probably not the same as a lot of the people in your Discord, but there may be something that I can add to the Discord. Now, like you said, I've been part of your investment team, and we've made several videos over the last summer and fall. And I was telling you the other day, a lot of people call me Debbie Downer and this and that, because a lot of the videos that we made were of the growth stocks that we talk about all the time on the Discord, and we talk about in your videos. And I went back through and I looked at 17 of them that I reviewed for the Discord. And of the 17, I only said I would buy an only speculative one of those. Okay.
All right.
And that was Hive blockchain. And Hive is, a miner for Bitcoin. And I said that would be purely speculative, but I do have some, interest in Bitcoin. The rest of them, like Path and Twilio and Virgin Atlantic and Palantir and Roblox and, just down the line, 17 of them, I did not. I did not say I would buy any of them, but I didn't tell anyone not to buy them either. It's really up to yourself on how you do it. I did a little exercise, and I looked at from the time that we did those videos to today what the price was.
Hey, that's not fair.
Well, the one that I would have bought is down 38%, but that went from $2.92 to $1.80. I don't really have all that much of it, but as a whole, the whole 17, the group is down about 50%.
Yeah.
Okay. So I'm not saying, and the time we're in is different now. But the way I invest is for looking forward, and I could have taken a couple of these and put them in my portfolio, but I would not have taken them all because of this risk, this 50% risk that we have. So with that being said, it's fun to be a part of your tribe, and a lot of people want to know about backgrounds. And I grew up here in the Midwest. I went to the University of Nebraska. I got a degree in economics. I got a minor in political science, Russian language, and climatology.
Wow.
Put myself through school as a quality inspector at a defense plant. So I always tell people, you remember the cartoon where at the end of the line, there's, Bugs Bunny is hitting the bomb coming down and writes Judd on it. That was kind of me. I was a quality inspector. Okay. When I graduated, my degree in economics was all about statistics and predictions and models and stuff. And at the time, I became a quality engineer for this company on an interballistic continental missile program. So I was working on rockets basically, and became a certified quality engineer. And all I did was look at charts and graphs and did predictions and experiments out to, if we did this, what would the probability be of success and things like that. And that got me through a lot.
Heavy analytical background.
Basically, yeah. And I remember when I took my first statistics class in college, I said, I'm never going to take another one again. And here I ended up, it was kind of my career. So be careful what you say you're not going to do.
Yeah.
So I moved out to California to another defense plant, General Dynamics, and I worked on nuclear missile programs out there as a supplier quality engineer. And I got to see a lot of manufacturing and supplier quality, all over the country. When I was finished with that, I had a job offering in the computer industry, and we made little parts for disk drives back in the beginning when a disk drive was about as big as your turntable, and that was 10 megabytes. Mm-hmm. And then they got smaller and smaller. So that gave me the opportunity to travel around the world, working with suppliers and working with factories. I got to see a lot of different companies in Japan, in Korea, just in the Far East all the time. So I got to interact with a lot of different people. From that point, I moved out to Houston to Compact Computer Company. I was their director of supply. Go ahead.
No, Compact. That's a name that rings a bell.
And it was just in the startup mode. So there were probably 500 employees at that time, 600 maybe. And I didn't know anything about them, but it was a fun time to be. That was when Apple was coming up and everyone was competing against IBM. And I remember Gateway Computer and Commodore Computer and all that.
Computer was a Gateway.
Yeah.
And the box looked like a cow.
It did. Well, that was, Gateway Computer. And they were up in South Dakota, and they were very successful for a while. Yeah. And you know how industry goes. You have, like you talked about in the auto industry, there were a lot of computer manufacturers, and now it's down to, HP and Dell, and I don't even think IBM does it anymore. And there's probably some Lenovo's and those types out there. So I got to travel around the world. I had 2,500 suppliers that I was helping. Went to Europe, had offices in Scotland, had offices in Japan. I got to see a lot and say a lot of technology. And back in those days, the computer and the hardware drove the software and the processor. So Microsoft and Intel were behind us at that time. So we were always pushing them. Then it flipped on us, and their software and processors got faster than we could make. And then the computers became basically a commodity. Everybody has one, like your watch or your phone. From that point, we merged with another company, and I went back out west to Santa Barbara and worked as a consultant in another company that was one of my suppliers. So I spent about 3 years as a quality manager, director out in Santa Barbara. When he sold his company, I moved back and I did some consulting in Chicago and Texas and different areas. Ended up at one point during this whole time, I saw a project manager position for a company called AccuTrade. And so back at that time, I wanted to not travel as much. So I applied and I became a project manager. Well, AccuTrade became Ameritrade. AccuTrade was the first company that allowed touch tone trading on your phones for $29.95.
Oh, really?
Yeah. And then Joe Ricketts, who owned AccuTrade, made Ameritrade, and that's when the internet came up and you could do $8 trades. And then that's when the trading process boomed.
Yeah.
So that was very interesting. I spent about 8 years and, worked up to be a director of operations and really got into the financial, as far as how the markets work. And it's amazing how these markets work and how we know nothing about them, and how disadvantaged the retail investor really is.
Yeah.
It really is. And I learned a lot. And from that point of view, I became a vice president of operations at a student loan company, a guarantee company, for about 2 or 3 years. Got a little bored of that. The financial crisis hit in '08. Some partners and I, we went out and we bought childcare centers. And we had 5 different childcare centers here in the Midwest. And we did that for about 10 years and we sold those off. And then I became a vice president of a non-profit organization, which you have criticized. So I'm one of those bad guys. And recently I decided
what
to just...
What a perfect match we are.
I know, I'm about the opposite of you. So, but we get along so well. And I think, we feed off each other and I can learn a lot from you. And hopefully there's some things that I can teach everybody here too. But I ended up just in December, I think we were talking, I said, I'm going to hang up my hat on that. I'm going to do more of this investing and hang around the house more. And I've been very happy since I've done that. And that's where I am today. And, I deal with the market and I just live this stuff. So I just love it. But
so
when you look, go ahead.
Give the viewers kind of an overview of if somebody asks you, what kind of investor are you? What would you say?
I'm a very cautious investor. My dad was an accountant and I learned about investing when I was all through my youth. But when I was 18, that's when I really started. He was back, and I remember it was back in the 70s with inflation and 80s, and when you can get a CD for 18% if you had the cash.
Yeah.
My dad did, and he started laddering into CDs. And then from there, he laddered into bonds. So that's where he made his money. He never got into the stock market.
Wow.
But back then you could do it. And he just had an income stream and he just put it back into different bonds.
Yeah.
I was more into, when I started out, you couldn't really trade. You had to get into a mutual fund, which I'm sure, so you would send a check to Guardian Fund. And then, 10 days later, you'd get a statement back, says you have $1,000 worth of X fund. And if you wanted to see how you were doing, you'd either have to touch tone call in every day to see where it closed, or wait for the paper to come out a day later. And I remember
I would the charts and find
absolutely.
Yes, yes.
And I used to do that. I was that kind of a nerd. Yeah. And from then, once I got into Ameritrade and that, it was all online and I learned a lot. And when you think about it, when I became, a member of the Ameritrade family, we all had to go get a broker's license and it's an 8-hour test and it is, as it's detailed and not just one. If you wanted to get into margins or options or whatever, you had to take those licenses also.
So did you have to get a Series 7?
I had a 7.
Yeah.
I had a 7. Yeah.
Yeah. And it's a weeding out process.
It is.
Yeah.
Yeah. It's no fun. I think I went through it and I came back and my boss says, well, I passed on the first time. He says, well, what score did you get? And I said, I think you needed a 70 back then. I said, I got an 82. And he said, you studied too hard.
That's exactly what my boss said.
It must be an industry joke.
It must be.
So anyway, I just started investing. I started with mutual funds and I stayed with those. And then when ETFs came up, I thought those were great. And if you don't have time as an investor to really sit like I can do or you can do, I would get into an S&P or some kind of an ETF that's low cost and let your money build. I still have them today. Okay. And that way you don't have to worry about it. Now, let's just add, some of our investors on Best of Us might have worked really hard last year, and I don't know what yield they got out of their account, but if you would have just put it in, an S&P 500 index fund, you would have made 27%.
Right.
If you let it with no work whatsoever, but just sitting there. I mean, so I think that is the easiest way to start, because if you think you're going to beat the market coming out and not knowing much about it, as you know, Carrie, it's not going to happen. I just looked up a story. It was in the Financial Times, and they said in 2021, guess how many professional managers who managed large equities in the U.S. beat the S&P 500? What percent?
Of money managers.
Money managers.
I would say somewhere around 55%.
25% only beat
25 beat the S. Of course, the S&P 500 was the historical average is closer to 8%.
Right.
Yeah.
Right.
So and I think there was last year was an unusual year. I think
it wasn't.
Because of all the money that was pumped into the market, all the hype around SPACs, all the meme stocks, and then the bottom has just fallen out in the last 3 weeks.
Right.
I just did a video, and I sought out what the level of margin is at a record high. And so what we're seeing today is a flush. It's people who are on margin who are being called out and sold out.
Yeah.
And I would guess, based on what we're seeing, that the people in the stock market, the number of actual participants will probably drop in half in the next 3 months.
I know you said this, but I don't trade on margin, and it's like going to Vegas with your credit card and no money in your bank. So,
yeah.
So I would not recommend margin to anybody, especially beginning traders. When I was working in the industry during the .com crash, and as the market was going down, I'd be in my trading room and we'd be taking orders for people trying to catch a falling knife. And then I'd walk to the next room. It's our margin room, and they're blowing people's accounts out, Yeah. And it was horrible. It was horrible. And I wouldn't want that on anybody.
No, that's sleepless nights, and well, I guess that we have all heard the stories in the Depression, the people jumping out of the window of the 30-story building, and you think, why would that happen? Well, it's one word. It's called margin.
Yep. Yeah. And I was talking we have a little investment group that we meet a couple of times a week, and Drew sits in on it once in a while. We just talk about the market on the phone. And I was saying the other day, there's no bigger gut punch that I've ever felt in my life is to have all my stocks go down and I feel like there's nothing I can do about it. And then I hold on to them and they never come back. And that is a part of what a lot of people don't know is, the math of percentages, that when you lose, I just said that the stocks that I looked at lost about 50%. So do you know how long it would take or what you would require to get back even on a 50% loss?
You gotta get 100% gain.
100% gain.
Yeah.
That's almost impossible.
People don't understand that math. That was something I learned very quickly.
I learned that the hard way.
Yeah, it's down 50%. Well, now it's up 50%. You're still got to add a 25% loss. And
that could take forever,
Or I love to turn to the example of Amazon. Was at what was it, at 75, dropped to $7.50. But if you would have hung in, it has paid huge rewards.
And I agree with that. But of the one Amazon that was there were probably 250 that didn't make it.
Exactly. So you've got to know what you own. And
absolutely.
you have a reason to own it. and you have to do your research. I agree with you wholeheartedly, and I think there's some guilt here, and I need to address it, and I try to more and more in every invest. Do not take my recommendations. Just take a look at what I'm suggesting, and then you make your decision based upon your knowledge base. All I'm here to do
Absolutely.
is point you in a direction. If you
Yep.
take a blind lead, shame on you.
I agree. Yeah, I mean, I used to call it back in the day, because again, you and I had to get licenses because back then people couldn't get on the internet and do their own trades. They had to go through a broker, and you had to be licensed to do that.
Right.
If someone called in and wanted a broker to place a trade, we had to be licensed to do that. We had to be licensed whether we did it or not. Then all of a sudden, and it's not a bad thing, the democratization of the financial markets. People now can just open an account and go in. We always called it, a casino. If you don't know what you're doing, you're basically going to a casino and you're throwing your money on the craps table.
And
you got to know what you're doing.
Into the casino, stand in front of it and look at the building and ask yourself, who's paying for this? Who's paying for Caesar's Palace?
Yep.
Yeah.
Exactly.
It's not the proprietor.
Yep. And that's where we get into, knowledge of the markets. You've said it several times, we're up against the big guys who have staffs, they've got researchers, they've got computers, they've got modeling, they've got quants, they've got all this stuff. And we've got each other, and we've got the internet, That's why, and think about it. 1 in 4 money managers who have all this information only makes more than the S&P 500. Yeah. Okay. And we expect to do better. So we really got to be better, and we got to be careful on what we do, and I always, go ahead.
Mark, something else that it really came to light, just this last Friday at the Zoom meeting of the tribe, and you'll remember one of the members of the tribe made the statement, "I'm scared. I don't know what to do. I'm literally shaking in my boots," and the tribe members kind of gathered together and talked him down, and made him. And that, I think, is a tremendous power of what the internet can provide on the other side of the tremendous amount of risk that you can. You can create a community. And that community can possibly help you understand and walk you through. I also think there is a tremendous lack of financial literacy. Again, at the tribe, you might remember at our meeting, someone asked, "What is margin?" And this is a person who had been trading. And under today's brokerage accounts, you can fall into margin and not even know it.
Absolutely.
And then just wake up and say, wow, what does that number represent on my statement? That negative cash number. That's the money you're borrowing to fulfill the trade that you made.
Yep. And you're seeing, as you said, you're seeing a record amount of margin out there. Now it's come down because it's getting blown out in the market.
It's getting blown out. Exactly.
Yeah. Yeah. It's not only in the equities market, it's in the crypto market, it's in the auto market, and you can, in good times, you can make a lot of money and everyone's an expert. I remember in the .com on the upside, everybody was an expert, and they would call in because CNBC had that ticker and said, oh, that's not the right price. I just saw it go, and they didn't even know it was a 15-minute delay. That's moved a lot since then.
Yeah. Well, Mark, I'm glad you shared who you are, what you're all about, what your interests are, and we're going to be publishing one of Mark's videos. What are the priorities, and what is the criteria of what you're going to be talking about?
I would kind of maybe
Okay.
down below in this video, people would want suggestions, and maybe we can look at that, Okay. Mostly I do, as you saw in the when we were doing a stock analysis, I do research into specific companies that I like and why I like them. I kind of get into the weeds, as opposed I don't go and just look at their marketing material. I get into what they have to supply the SEC and try to figure out if there's a problem or there's not a problem. So if there's certain stocks that people want, other things that I could probably help and focus on is investment styles. And a lot of people, I think, need to diversify a little more, spread their risk out, instead of going all in on maybe all growth stocks. If you're young, you can do that. If you're getting up to my age, you probably don't want to be doing a lot of that. Save 10% or 15% of your portfolio and do that kind of stuff and do some speculations. But, even the New York Yankees can't hit a home run every time they're up at bat. Even the best home run hitters have like a batting average of 333.
Exactly. Okay. All right. So what you're at, if I can play it back, you're saying you would be open in the comments or at the Discord. And Mark will be a participant at the Discord. He already is. Asking you to give a deep analysis of a particular stock,
or any situation that we're a portfolio kind of allocation for a certain age. Maybe we can do that.
Okay. So you're going to take your lead from your audience.
Yeah, and if not, I'll just make it up on my own like you do. Now, I am not going to get dressed up in ski goggles and have an earthquake. That is not good. That I cracked up on that, but I'm not doing that.
Well, let me tell you what I had to do today, or what I was playing with today. You've heard Warren Buffett's statement of when the tide goes out, you find out who's swimming naked.
Naked, yeah.
Okay, I contemplated it. It for my thumbnail. But
now that would be funny.
Nobody wants to see the ass of a 77-year-old.
That would be funny.
I think that would have been clickbait, wouldn't it?
Oh, I think so. Yeah. Might get in trouble with the FCC or something. I don't know.
Right. But what the hell? All I can do is slap your hand. Okay.
Anyway, I'm looking forward to this, and hopefully I can help some people, and I'm always learning too, like you are. I don't know everything, but I do have 40 years of investing experience over time, and have been and seen the market change a lot. Yeah. And I do know some of the back things that happen, behind the scenes that people don't know about, behind their computer screens and what they're up against.
Yeah.
And it's a lot, like you do. You know that too.
Oh yeah, it's and you've got to, my way of thinking, you have to know who your opponent is.
Absolutely.
You have to find a way to gain an advantage.
Right.
And if you can do that, if you can gain an advantage and then pursue it, you got a chance. Okay, that's part of the toolbox that I want you to have at your disposal here at Best of Us Investors. We're a tribe. We're a collection of people. A year ago, I didn't know Mark. He, as he said, found me. He didn't identify with my style, but he identified with the information that I was sharing, and he felt that could broaden him. He has then been very active on our Discord. That's where our tribe meets. The tribe is a group of people with a common interest, and that is to make money in the stock market, recognizing that we're dealing with professionals, and if we will work together, we may stand a chance to make some money against them, because 80% of the retail investors lose money in the stock market. And I'm sure you, like me, have lost some money over the last couple of weeks. But I have a strategy that I believe that I can work that will ultimately achieve my objectives. And that's what I want to do for you. So you'll find Mark next Wednesday at 4 p.m. Be sure to tune in to him and learn from him, and I think your life will be better as a result, and you will achieve our 3 objectives. Make better financial decisions, learn how to keep more of what you make by understanding our tax code, and building family wealth. That's our goal. That's what Best of Us Investors is all about. That's what our tribe is all about. Be talking to you again soon. And be sure to tune in, Mark, next Wednesday at 4 p.m.